Hey everybody, Scott Straub here, and in this short video I'd like to talk about whether it's a good idea to refinance your student loans. And before we get into the pros and cons, let's talk about exactly what this is. If you have one or more student loans, often a federal loan, but it could be a private loan, and you exchange or swap them for one big loan, that's what a refinance is. So let's hit some of the bullet points here. It might be a good idea, but only if it saves you money. And you can figure this out hopefully pretty easily. Find out what you owe right now with your current student loans and what the new loan might cost you. Now, if you're considering doing a refinance, it might be a good idea if you have a very high stable income and you have a great credit score. Why? Because lenders will give you the best rates if you meet these qualifications. Otherwise, you'll get a really high interest rate, and there's a very good chance that it won't save you any money. Now, it might be a bad idea, and you should really listen to all of these. Number one, because if you have federal loans, you might have an option for a flexible payment schedule. And that is when they say, hey, listen, you only make a certain amount of money, so the loan you're going to pay each month is only 10 or 15% of your total monthly income. You have to find out about that. But that's an option with some federal loans. And if you get a private loan, most likely you're not going to have that option. You lose out on possible loan forgiveness. There are programs where you can actually get your loan forgiven. You may lose out on some possible tax deductions. Sometimes you can write off the interest for federal loans, but you may not be able to do that for the private loan, and that's a serious consideration. And also, if you do a private loan, you have to check, but you may have to start paying right this second. And if you're in school, well, that's probably not going to be a good idea if you're not bringing in a good salary. And the very last point, if you do consider a private loan, really watch out for the variable rate interest options. Why? Well, if you've never purchased a home before, there are options where you can get a variable rate mortgage, and it works out really good if interest rates are really low. But the problem with this is down the road, interest rates may and often will go up. So you may pay a lesser amount now, but the interest rates could go skyrocketing in a couple of years. And then you might be paying $500 or $600 now, but maybe down the road, you're paying $700, $800, $900 when your interest rates go through the roof. So before you jump into a refinance, really do your homework and make sure it's right for you. Best of luck, everybody.